Welcome to the GTR Asia Virtual Economist Insights on how well equipped are Asian markets to adapt. My name is Azim Walli. I'm Managing Director of Transaction Banking Products at MUFG Asia Oceania. Michael Every is our first panelist. He is the Head of Financial Markets Research Asia Pacific for Rabobank. Based in Hong Kong, he analyzes the major developments in the Asia Pacific region and contributes to the bank's various economic research publications for internal and external customers and to the media. Michael has nearly 2 decades of experience working as an economist and strategist. Before Rabobank, he was a director at Silk Roads Associates, a strategy consulting based in Bangkok. Alicia Garcia Herrero is a senior fellow at European think tank Bruegel. She is also the chief economist for Asia Pacific at Natixis and non-resident research fellow at Madrid-based political think tank Real Instituto Elcano. She is currently adjunct professor at the Hong Kong University of Science and Technology and member of the advisory board of Berlin-based China think tank Merex. Finally, Alicia is advisor to the Hong Kong Monetary Authority's research arm and the Asian Development Bank, as well as a member of the board of the Hong Kong Forum and co-founder of Bright Hong Kong. Thank you both for joining today on the GTR Virtual Asia webinar. It's not every day that I find myself in front of 2 preeminent economists, and I can't tell you how pleased I am to be here today and grateful that you have both agreed to be panelists today. So thank you and welcome. Alicia, if you don't mind, I'll start with you. Some months ago, you wrote about the current trilemma of the coronavirus pandemic, weak oil, and ultra low rates, and that certain industries such as real estate, healthcare, and communication services, for example, could be less affected than others, such as energy and financials. Given the length and intensity of the downturn, do you still maintain this view?
Well, I guess it's all relative. I would maintain that view on relative terms. So it's obvious to me that without massive stimulus, which we've seen everywhere, it's not only the US or Europe, it's Japan, it's South Korea, it's Singapore, and many other countries, we would have seen a collapse of everything on earth. And of course, on relative terms, I would still argue that the sectors that we identified then might have done better than others. Actually, for real estate, to be frank, the specific definition of the note we wrote was about logistics and basically industrial real estate rather than commercial real estate or obviously tourism or hospitality related real estate. So we would have to dig deeper to confirm what we said there. I think ICT obviously has done great in the indices, not only in the US, even Taiwan, and any country that has a comparative advantage that fits positively with healthcare, ICT, logistics has done relatively well, but it's all relative. So, if you are into relative investment, I actually think this still holds true, but the level has been cushioned by the stimulus. And that's why we've seen, enormous increases in stock markets in the US and China, even Taiwan for that matter. But I don't think this is going to last. So my call is keep that relative, but I think it's going to be worse in terms of the level. So if you invested in following these relative terms, you did well, just exit, in my opinion, because as the crisis becomes more widespread, I really think that everybody will be affected to a larger or lesser extent. In other words, there won't be winning companies that will be able to distribute profits, let alone dividends, as they wish, because they'll have to redistribute that wealth. And I think that's where we're heading, especially in Western economies, obviously.
So, Alicia, as far as sectors are concerned, the article to which I refer talks about neutral sectors such as IT, consumer staples, real estate, and resilient ones in communication services, healthcare, and utilities. So when you talk about, it being relative, Is that dependent on how long this is going to last, and could even those resilient sectors obviously then be impacted?
Yes. So what I'm trying to say very simply is that if you buy those stocks today, or even any bond issuance, with the expectation that they will do much better in the next 6 months, that might be wrong. But however, if you didn't buy them today, but you kept them, and you want to switch, or you wanted to switch, whatever, from energy to those sectors, that would be, a switching strategy is still valid, in my opinion. What I'm not sure is that if you buy today, you may expect an additional ride in those, even in those sectors, in the next 6 months to come, because I think their gains have been excessive for the situation we are in, if you see what I mean. So yeah. Those excessive gains, especially in regulated markets, might no longer be kept by the corporates and thus their shareholders. So that because at the end of the day, this is a massive crisis. The governments are stepping in, but there will be a time where they will realize they can't just step in. They will have to increase taxes. And who are the winners out here? These are the sectors that will need to contribute. So that's why I'm saying maybe, somehow on a total investor return, I may not buy today in these sectors. But if I wanted to still switch, I think they will still do better than other sectors that have been poor so far, as we actually wrote much earlier than now. And I think it has actually held true.
Yeah. One last question on this topic. So how about something like communication services, which has a basic demand? Is that completely immune, or?
Well, it's not immune, but many things can happen. First is, of course, tech decoupling. We're seeing it already. If somebody's forced to sell its operations in a certain country, exactly what I'm talking about, either TikTok or Tencent, or that's a massive loss for a company. And it could be different. It could be Apple in China as a retaliation. So first thing is, as things get bad, everybody's going to swim, to get to the shore. And that might actually entail a loss, a relative loss though, which will be absolutely read by the market for this sector as well. The other one is the obvious suspect that they may, be forced to share more of the burden. So think about all of the taxes in places like Ireland. Is that going to be feasible in the future? I mean, I think their environment, being winners, will get tougher because those revenues will be massively needed. And it's not so much about the sector itself, which will be needed, you're right. It's about catching those gains or reaping those gains beyond their own companies by the government, or because of the China-US standoff in the first case. Yeah.
Understood. Thank you for that. Michael, as far as the ASEAN markets are concerned, which markets do you believe are less affected, and why do you think that is? I mean, in particular, I'm thinking, about China, about New Zealand, about Taiwan. Would you see certain, markets that are much more, able to withstand the duration of, such a pandemic and the economic impact?
Well, it depends what kind of framework we're answering that question in or through. If we're just looking at the macro economy as a whole, rather than talking about an individual asset class, there's only one country that holds up positively at all, and that's China, which I'll address in a moment. Everyone else, it's just a disaster. I'm not going to try and sugarcoat it or put a layer of paint over it. It's just shocking. And it's not actually directly due to the impact of the virus per se, in that, for example, if you look at New Zealand, which has largely dealt with the virus successfully, and up until recently hadn't had any cases for ages, they're not going to be opening their borders for possibly a year and a half, which just devastates the entire tourism and services sector. And if you look at the latest business confidence surveys, they're absolutely at rock bottom. And in fact, the RBNZ, their central bank, is leaning towards cutting rates into negative. And they've even floated the idea of not just buying their own assets, which is QE or quantitative easing, money printing, basically, even though people try and dress it up as something else. It's money printing. But they're not even talking about just doing that. They're talking about buying other countries' assets, which would try and force their own currency through the floor, which is the kind of tactic we last saw in the 1930s. So this is one of the winners. So it's a disaster economically, and I will not try and put varnish on it. The only country where you can say it's different, and I think artificially so, is China. And that's largely because, as we know, China is not a market economy. It's not recognized as one by the US or by the EU, or in fact by anyone. And they can just continue to pump prime. They can tell their banks to lend and make no profit doing it to various different projects which have no underlying profitable justification in a market sense. And by doing that, they can ramp up production. And they have very successfully, once again, ramped up production. Now, this is something you could argue we could do with seeing a lot more of right the way around the world. That's a whole separate debate. But if we're trying to present this as being some kind of genuine market-based endogenous recovery in China, the answer is absolutely not. And it certainly isn't anywhere else either. So I really think we can only differentiate between China and everybody else, and everyone else looks rotten, to be honest.
Even Taiwan?
Well, obviously Taiwan is linked to the Chinese economy to an extent. So that can lift that boat to a degree, but it's also linked to the outside world too, and that sinks it as well. I know that one can try and accentuate the positive, and there's a whole industry for doing that, but I don't think we should try and accentuate the positive too much in this particular environment. Not when we have central bank after central bank coming out just this week as I speak and saying we're going to cut, we're going to do more, we're going to cut, we're going to do more. If everything's so good, why are they saying that?
Yeah, understood. Thank you for that. Michael, in July of this year in a Rabo Research article, you asked the question if India should print money to fight COVID, and you referenced the debt monetization scheme under the modern monetary theory, or MMT for short. I thought it was just a brilliant analysis. I really enjoyed it. Can you explain to those that are attending the GTR session what that is, and in particular the eligibility requirements, and which ASEAN countries you feel meet the criteria?
Well, thank you for the compliment. That's very kind. I mean, the note tries to make a simple point, and that is that MMT is one of these buzzwords that people are talking about at the moment, a bit like crypto or disruption or gold. No one quite knows what they mean, but if you throw them into a conversation, you look a bit sophisticated. And we tried to actually break down what do we mean by it. And the simple matter of fact is modern monetary theory isn't a theory, it's reality, it's established history. It's not modern, it's actually very, very old, and it isn't monetary, it's all about politics. And what it actually says at the end of the day is you can print your way out of any crisis. If you have your own sovereign currency, if you're in control of it, you can print as much of it as you want. And therefore you can reflate your economy. Now, we've seen that debt monetization over and over again in the past, in country after country, and it usually ends in horrible tears, as we know, which is why our entire framework today is largely set up not to do it. What we tried to argue is there is a tiny subset of countries who could consider doing it. They have their own sovereign currency and they meet certain criteria. And crucially, they were running a large fiscal deficit already, proving that they can get away with doing that, and they have the ability to do it. And while doing that, still running a large trade surplus. So in other words, domestically, the government's running a large debt, which the central bank could monetize. But vis-a-vis the rest of the world, you're still a net lender and a net exporter. And by doing that, you maintain the underlying strength of your currency. So therefore, you get all the benefits of having that money printing, but you don't see your currency collapse, as we saw in Weimar Germany and Zimbabwe, in Argentina, Brazil, etc., etc., etc. The very, very few countries meet that criteria. The data shift around, but we felt that within ASEAN, technically Thailand could meet that criteria, which might surprise a few people listening. I think the bureaucracy there is far too conservative to consider it, to be honest. Traditionally, the Bank of Thailand would never look at this kind of thing. But technically, they probably could, within a certain window. Where I do fear, however, is that countries like India will consider doing it, and Indonesia, and many, many others who are leaning in that direction. And history shows it doesn't end well, because they are running large trade deficits, large current account deficits. And with a lag, you would see a large exchange rate depreciation and all the wrong kinds of inflation, which is why we don't generally do it anymore, and why we don't have an easy way out of this crisis for everybody, just for a lucky few.
So those are the risks, right? The risks that you had just articulated. Yeah, I remember, Alicia, that I was watching an interview at a finance event that you had held that you were participating, I think 6 months ago, and you seemed, Michael brought up Thailand. You seemed very bullish on Thailand at that time. I don't know if things had changed.
Bullish on Thailand. I can't recall that, but first of all, because it's hard to be bullish on an emerging economy with an aging population and very low interest rates. Right. So if I were to remember the context, maybe I could tell you why. I actually think, frankly speaking, that the macro management, though, of an economy like the Thai economy has been rather good, and I'm very sorry that they changed their central bank governor, Verratai Santipro, for example, or people who are actually quite serious. And I'm sorry about that, because I think that's the problem with the Thai economy is structural, indeed, because of this aging population. So they did their utmost, in other words, but that doesn't mean that I'm positive on the outlook of a country like Thailand that has such structural issues. And I'm not going to talk about politics, because then I could go on. And that was the case even 6 months ago. So again, I don't recall that. Maybe it was something very specific about inflows, or but if you ask me about the long-term prospects, they're sitting on gold, if you ask me, Thailand, in terms of their strategic position on the Mekong area, and how much they could actually be investors there. But I think Michael said it very right. They're too conservative. If I had such low interest rates and I would be sitting in front of Myanmar and all of those projects, frankly, I would take them. So this is what I'm doubting, because this is my general view of Thailand, that they should actually dare more in terms of their strategic investments. Frankly speaking, I don't know what Michael thinks. I mean, I'm sure you know more about Thailand since you've been based there for some time, but this is my hinge as an economist. You're sitting right there. You have an aging population. Let it be, just rejuvenate your society, invest in your neighboring countries, and for God's sake, increase your return on assets. You're a little Japan, but you're poor. Sorry to say. So this is what I think about Thailand. What I said 6 months ago wouldn't be too different if you asked me the same question. But maybe the question was, cyclical, and what the BOT would do, and that's a different topic. But I've not changed my mind. This is basically what I think about Thailand.
Yeah, no, you've just confirmed that. It was in the context of China and the fact that, and you had highlighted this in that interview, that because that they are sitting in the Mekong Delta, they've got a lot that they can. That's
the potential. But I have to add that I remember that event. It was in Bangkok in January. Now I absolutely remember that interview. One thing is the potential. The other thing is the reality. Are you so I was trying to urge, whoever was listening, for God's sake, take this opportunity.
Right.
Now we have different problems in Thailand, because that was right before COVID-19.
Correct.
And I'm afraid that golden opportunity might no longer be there, because they need to deal with a lot, in terms of tourism and so on. I don't know. It happened right before. And I frankly, lifers in Thailand have been extremely careful with their investments. If anything, buy US credit, why not, rather than go to the Mekong. I actually think that they should have focused on the region and become kind of a regional player, a regional leader there. That was really my call then. I remember, yes. Thank you for reminding me.
Yeah. Michael, do you share that view?
Well, broadly I do. I just wanted to add that I think about 5 years ago, I gave a speech at the UN in Bangkok. And I actually said I thought that, worryingly enough, Thailand was likely to be a thought leader for where other economies globally were going to be heading, where you had subpar growth, aging population, massive income inequality, which is the other structural problem that they need to address. Overly conservative governments which were not taking the opportunity to really invest to close those income gaps, invest in infrastructure and education to really lift the whole country up. And as a result, you were seeing massive political polarization, which was slowing everything down and making everything worse. And I have to say, you look at Western economies now and you tell me that isn't exactly where we're all heading, unfortunately. So, I think, we could have learned a lot from Thailand 5 years ago.
Yeah, good points. Alicia, let's discuss isolationist trade policies, and in particular related to personal protective equipment, where we have seen nations that have, exercised trade protectionism in this regard. Is this still the case? And if it is the case, will it be exasperated for countries that need to import critical healthcare products, for their own needs to fight against the coronavirus? Especially, what happens, when a vaccine is available or other therapeutics that need to be imported, and there are these very isolationist trade policies that are still, very prevalent.
So, basically, to start, the idea that there will be rationing with the new vaccine, I think, frankly speaking, I just can't imagine a world where that can happen. If there is the means, maybe, there will be ration until you have enough amount, and not everybody will get it at the same time, obviously. But my point is that the way I see the world is quite different. Isolation, oh gosh, I can't pronounce that word. I'm sure somebody will help me. A country wanting to be isolated is a response generally to the rest of the world. So let me explain you what I mean. So do you think China is going to stop exporting medical devices, let alone masks or anything, after you actually look at the numbers? Medical components, including, from pharmaceutical to medical devices, masks, all of that in China was 16 billion. You can look at Comtrade data, 16 billion in December. By, I can't remember whether June, so I think it was June, 160, that's the number I have in mind. What kind of protectionism? You're more than happy to sell that. Of course, you may hoard. I saw that. I'm now temporarily based in Taiwan, and I saw that here as well. When they were producing 1.4, I think, million masks, and they, of course, they had export controls. The minute they increased their production to 40 million, they started either donating or selling, for that matter. And if you look at the numbers, the same picture, or the smaller number. So Taiwan today is the second largest exporter of medical material in the world because of this. So, it actually, what I'm trying to say is that there's no such thing as those export controls, that idea that everybody will keep it for itself is only very temporary, because everybody's trying to make the day out of this, including with the vaccine. So I actually see more flows rather than less flows on this particular topic of strategic medical exports. Very different thing though are things like semiconductors or sensitive technology. That's very different. But on something that you can replicate is a question of how many, how many mass machine makers you have. It's a question of volume. I have no doubt that whoever can produce it will be happy to sell it. As I said, so I just wanted to answer the first part of the question. I think nobody's going to be protectionist in things they can sell well and expensive. But if you're talking about technological transfer, that's a different point.
Different story.
That's where we will have clearly protectionism.
So let me get your views on that then before I move to Michael. Let's talk about techno isolation. Let's talk about China. Talk about
I wasn't trying to avoid the question. I was just trying to say that people think, you know, why I thought it was important to clarify, because we are in a world where people think nobody wants to sell anything. And there's nothing more actually more incorrect, because as Michael was saying, everybody wants to sell as much as possible. There's no domestic demand to serve. So beggar the neighbor in whatever way is the, you know, is the way to go for everybody who can actually produce something. Now, however, if you think that's your comparative advantage, if you're the US and you produce semiconductors, the company itself, Qualcomm, you know, largest, actually the largest US company in terms of revenues in China, you may, of course, be very willing, excited about continuing to export. But your government may actually think, well, this is like, you know, milking a cow, but at some point there will be no milk anymore. We need to keep the cow. And it is really about not overselling what is still your comparative advantage so that you can still do it over time. So it's kind of keeping your chances so that they last longer. And that is why that is, of course, going to be tightened further. You have BIS data, so the Bureau of Innovation I just can't remember the third part of the acronym, but you know, the US state in charge of export controls. You can see the numbers there. Not only have the approvals for export controls plummeted in China, by the way, also Hong Kong, before even they were treated equally. So, you know, this is a long story. Yeah, I mean, Hong Kong could no longer import as much sensitive technology as before, even before the lifting of the national policy act with the US. But that reduction in approvals is not only with China, it's global. Why? Because that is the same as the reserve currency, the dollar. That is what is left for the US. They can't just, I mean, in their opinion, it's not protectionism. It's basically keeping your comparative advantage. However, if you want soy and beef, we dump it on you. Maybe even dumping it in the sense of, you know, anti-dumping, maybe. I mean, I don't know whether they do, but my point is, it's not about selling. There's no harm in selling. It's about what you sell. And for sensitive technology, and this brings us to military expense and things that, you know, are even trickier than semiconductors themselves, although many semiconductors are also for military purpose, by the way. That's where I think we can't see anything but protectionism. And it's not only the US, China is now imposing export controls on drones. It's both ways. You want to keep your technology in an era where you know that there may be even double standards, that, you know, that we're there already. So there's no doubt, in my opinion. And I hope, I'm being very tough, so maybe Michael disagrees, it's fine with me, but I'm just saying, I've been kind of, you know, like preaching like as this were a strange idea. I think it's kind of common sense in my opinion, because it's always been there. Export controls have always existed. It's not new. It's just how much you tick further in that approval ratio, and that's where we are now. Very low approval ratio. Sorry, very long.
So thank you, Alicia. So Michael, everyone looking out for themselves, dual, protectionism, etc. Isn't it the multinational enterprise who suffers at the end of the day?
I think that's a good question. I mean, I have to answer that. I have to kind of circle back a little bit to what we were just discussing. Yes and no. I mean, to start with that first point, it depends. You can just regionalize production. You just don't have as efficient hub and spokes supply chains as you had. You have to localize and regionalize. You still make money. You just make it in lots of different places, and maybe not quite as much as before because it's not quite as efficient. And I agree with a lot of what we were just talking about there. I would like to point out in early 2017, I wrote a paper called The Great Game of Global Trade, in which I explained that protectionism was going to come roaring back everywhere in different sectors for many of the reasons we were just discussing about comparative advantage, trying to be sealed in, and about, you know, military expenditures, etc., and struggle for hegemony and, you know, military superiority, etc. I nearly got lynched by you know, a collective group of economists who, you know, were still free traders at the time, because heaven forfend, you should say that protectionism might come back. But at the moment, yeah, everybody wants to export except for, you know, key technologies which they want to retain. The issue is that not that many people want to import. And I do think that over time you will see more and more sectors which are employment heavy, not just national security in terms of this particular technology or this particular item, but which are national security in a broader sense, as in, you know, we employ 1 million people here or 2 million people there, or, you know, 200,000 here, being ring-fenced and saying, yeah, okay, so it's slightly cheaper if I get it from you, but if I spend the money domestically, the money circulates domestically. And that's an extension of the MMT argument that I was making at the beginning, because if you can shift more and more industries from one bracket back into the make it at home bracket, you allow yourself to then actually have the fiscal space to reflate your economy. But gradually, bit by bit, everyone starts to copy more of what China is already doing in spades in many areas, and which the US is doing more and more in different areas, which is, yeah, sell as much as possible, buy as little as possible. And the maths of that just don't work out. You know, you can't have a world of net exporters. So this is where it then becomes very unpleasant, very tense, very geopolitical, where multinational corporations can get caught in the middle, you know, of these clashing rocks coming together, as we already see, and where we all have to be concerned. But let me just stress, I think this is inexorable, inevitable, and it's playing out well above our pay grades. All of us, you know, this is an inexorable historical process moving in that direction, and we need to prepare for it rather than saying it can't happen. You know, and I'm not saying anyone here is saying it can't happen, but I do still read the odd article saying it can't and won't, and I think they're very much on the wrong side of history.
So, Michael, thanks. That's a good segue to my last question to both of you. And I'll start with you, Michael, which is, and I know economists love to be asked, you know, to look into the crystal balls. You know, what do you foresee then for global supply chains? You know, especially given what we just discussed around M&Es and you know, protectionism.
Well, I think it depends on the item and the area, but if you have to have a generic title, it will be localism, regionalization, and more so as technology changes. I'm no kind of engineer at all, but if you can do 3D printing, why aren't you doing it next door? If everything can be 3D printed, why do you need a workshop of the world? You know, you don't need any labor involved in it, and actually, you can save the environment by just printing it around the corner and just delivering it directly. So I think more and more we will see the complete breakdown, step by step, industry by industry, geography by geography, from a China makes everything, everyone else in the world buys it, to more and more is made locally of more and more things for various different reasons, whether it's national security or environmental or pure protectionism. And, you know, that will move at different speeds in different industries in different locations. But I think it will be very, very hard to go back to the rather naive map of the world we had up until recently, where we don't even look at what currency things are trading in, because we assume the US dollar from everybody, and you make it here and you sell it there, and you presume a minimum of barriers. I think, you know, that will be an artifact of history in the same way it was twice in the 20th century.
Yeah. You know, as a banker who finances supply chains for a living, I can tell you that, you know, we definitely have seen, but this had started before coronavirus, you know, a shift from China to, you know, other markets within ASEAN, where, you know, manufacturing hubs are moving, you know, to Vietnam as an example, or procurement centers are moving to Hong Kong or Singapore. So there is, you know, that shift within, you know, ASEAN at least, which effectively then changes your supply chains, or what you traditionally, you know, knew as your supply chain.
Sorry to interrupt, I think that is key, but just to stress that this is a dynamic process. So the first step might be, say, China to Vietnam, which I think we all agree is happening. Once you've proved you can do that, and I can't tell you how many people were telling me 4 or 5 years ago that couldn't and wouldn't happen. Well, it has. Why doesn't it then move to Mexico, just around the corner from the US? Once you've established that things can just keep moving, they can just keep moving until eventually settle right around the corner.
Right. Thank you for that. Alicia, how do you see the the world developing in as far as global supply chains are concerned?
Well, we wrote actually quite a few pieces exactly on the same idea that Michael is describing, and it's not about the future, but about the past, because the global value chain as such, when measured with input-output data, OECD, you know, all of this UNTAC data, which is what we use for 100 plus countries, you can see that the size of the global value chain has been shrinking since 2008. It's not a new thing. Now, what we call China's central role, or China centricity. I've been told by global value chain experts that I shouldn't say centricity, but centrality. But for whatever reason, I love the word centricity, so I'll keep on using it. So China's centricity in this global value chain continues, but as Michael was saying, at a decelerating rate, meaning everybody's coming down. 3D printers, also frankly speaking, less consumerism. We don't even want the goods anymore. You know, especially Europeans. I mean, it's just mind-boggling what's happening in Europe. People don't want anything. They just worry about destroying the environment, about losing freedom by possessing things. You know, it's very, very interesting. So there's even less demand. And the other thing is that, you know, this idea that buying cheap from China and producing in China, I mean, it's like people just don't want to do it anymore because the clients don't want it. You see, it's like also demand driven. It's not only about efficiency. I think companies have learned that their clients want something else. And it's not about demonizing China, because it's going to be the same with Vietnam. It's just that they don't believe in this model where you shift stuff for no reason, because the actual marginal cost, which might be lower, efficiency is key, is actually, as Michael was saying, hampered by humongous risks you can't even see. Remember the floods in Thailand, and you know what Japanese automakers had to go through. So that disruption is much more costly than the minimal efficiency gains you get out of all of this. And I think we had not realized. Now companies know that this is the case, and their clients are pushing them. So my point is, China's centrality in the global value chain will shrink, but the whole global value chain will shrink. I'm very much in line with Michael's ideas, but I'm always asked this question: Is it politics or is it economics? Is it rational or is it irrational? And you know, most people would like to hear from economists, it's irrational. It's just, you know, politics. It's just Trump. No, it's rational.
Yes.
It's rational because it didn't make any sense before. It didn't make any sense not to keep employment in Europe. I'm not even talking about that. It didn't make sense because the risk associated with such a complex value chain were undervalued.
Right.
And now we're seeing it. And the risks, by the way, are so much more climate change than geopolitics. It's not all about, wow, you know, tariffs from the US. No, there's many more risks that aren't related to geopolitics. Thus, I think, frankly, the world is being wise rather than stupid. And this is, for me, the key message. We always think things happen because somebody got crazy. No, people actually reflect after somebody got crazy. Meaning, yes, there is, you know, it helped make people reflect. But it's much more than that. And that, I think, is unstoppable. I'm not saying it will disappear, these global value chains will disappear, but they will shrink to their natural level, not to, you know, kind of a crazy level where you trade stuff, you produce yourself, you have your greens at home and you import them from, I mean, it's just not, I think we are all realizing that we went too far. That's all for economic reasons.
I completely concur, and it's a great pleasure to actually hear that. Thank you very much. I can't tell you how many conversations I have with people who seem to presume that, you know, if the US election goes one way, then the whole world will suddenly change back to how it was. I completely concur with that. Thank you.
Well, you guys have set me straight, because I do have to admit I was one of those guys. But after today, you know, my views have changed. Look, we have a minute left, and I gotta tell you, this was a huge thrill for me. Really, really exciting for me to be sitting in front of both of you and asking you these questions. And thank you for your insights. Very much appreciate the time that you've spent with GTR today and with me. We'll all hope for the best. Thank you very much.
Thank you.
It was a great pleasure. Thanks for organizing. Thank you so much.